Hey everybody, this is Wheeler coming at you for the weekly market update highlight. It's December 7th of 2020, and not a whole lot to report, but just want to go over a little bit of November overall and a little bit about what happened next week. And then again, these are just things that have happened. There are no recommendations here. You won't find individual stock picks or the next hot topic investment. That's not what I'm here to tell you. I'm here mainly just to inform you of what the market did last week, give you some perspective with that, and you take that for what it means with your own portfolio. As always, I suggest that you reach out to a financial professional, preferably me, I'm not going to lie, but if not me, somebody, and see how this information dovetails in with your portfolio. If you don't have a portfolio, as always, I'm happy to talk to you about that and see if there's some recommendations we can make for you for your specific situation. But other than that, let's jump in. November overall, I think you saw it, the drop at the very end. It was a good month, but you saw a drop at the end as people cashed in on their stocks. And you'll see all of this in the detailed email that I send out today if you haven't already gotten that. And if you're not getting those emails, again, just hit me at wheeler@spotify.com, and you can see my contact information in the description of the video below. Send me an email, and I'll make sure you get on a list for these updates. Again, these are just going to be highlights. The details are in that email, and feel free to dive into those as you will. But overall, November, you saw people basically cashing out on stock. It's kind of like the old Eddie Murphy movie, Trading Places. People, I'm not surprised by this. People out there cashing in, right? It's a good year, volatile year rather, and so the money's up. Some of these day traders or even some long-term holders like, you know what? My kids need the G.I. Joe with a Kung Fu grip. I'm going to sell that stock and make sure I have a good Christmas. So nothing really to be concerned about. For example, the Russell 2000, which is a measurement of the smaller businesses. Overall, it was up 18% for the month of November, and then it finished down on the day 2%. So again, nothing to be concerned about. Some other highlights for the week, though, and if I look at the numbers here, and if you look at the screen, it should follow along. But if you look at the Dow Industrial Jones, or Dow Jones Average rather, it finished up as a record high of $30,218, right? So for those, why does that matter? Well, it's a very volatile world, and just to put things in perspective, back in April, we went all the way down to 18,000. I think a lot of you thought the sky was falling, and you would not have been wrong to think that. It was a tough time. But again, if you look at the numbers, for those of you who did listen to me and stayed invested in a diverse portfolio, you've enjoyed that growth back up. We're at a record high now, right? And I kind of spoke to a lot of my clients about this earlier in the year, or last year rather, to expect this type of volatility. Now, I don't know where things are going to finish. I don't know day to day. That's not what I do. But long term, if you're in solid industrial grade or solid rather investment grade investments, you should be fine. You should be fine as long as you know where they're invested and you're diversified. And again, if you're going after pink sheets, if you're going after, no offense, crypto or any of that kind of other stuff, I can't speak to that. That's a very risky, more volatile market. But for the solid blue chip type investments we're talking about, I'm not very surprised that we are where we are. And that's even with the COVID that happened this year. So with that being said, that you will see, as you're seeing here this month, is starting to look good because things like the stimulus package, there's hopes for that, right? And that's what the markets are reacting to. They're reacting to those hopes for that stimulus package. And I'm not going to get into politics again. This is apolitical. It's just reporting on how that political market affects Wall Street and Main Street, for that matter, in terms of investments. And so far, so good. And again, like I've told many of you time and time again, it doesn't really matter who got elected president. Right after the presidential election for the last, I think, about 100 years, the stock market always went up. So, I'm not shocked by what's going on. Other good news is because of the flood of news of the vaccine, reports of the vaccine rather coming out and being rolled out, that's pumping up the markets. Now, again, all of this is still tempered with what's going on in California and some shutdowns, some pending shutdowns also to be had in coming states, whether they will or will not close. Again, it hurts small businesses. But overall, looking good. My point is, we're at a record high now with the Dow Jones. If you keep looking here, you look at the S&P 500. Last year, 2019, we were closing around 3,200, and now this year we're kissing 3,700. And so again, I'm not going to go through all the numbers here. You can see it for yourself, but things are looking rather good. The dollar lately last week is at its lowest in 2 years. Some people get upset by that. Again, everything is relative, especially the dollar and currency. You don't want it to be too strong, but you don't want it to be too weak. So at this point in the game, I'm not terribly excited about the dollar one way or the other. I'm not moving money because of what's going on with the dollar. Now, again, if you're trade specific, if you're industry specific, then that is relative to your industry, and you should act accordingly. But overall, for a diversified portfolio, there's nothing I'm seeing to where I've got to move major amounts of money rather to take advantage or disadvantage, however you want to put that, of what's going on with the dollar. So again, I wouldn't be too concerned with that. Look at notes here, some other numbers. Unemployment again is trending pretty good, and again you can see the numbers in the email. I'm not going to go through them all, but basically, unless you're in the Virgin Islands, you look at the Virgin Islands. That's the highest unemployment rates for those snowbirds out there. If you're looking to maybe go work part time on the island, probably not going to happen. You probably need to have enough money to sustain yourself to where you don't have to get a part time job. There's a lot of unemployment down in the Virgin Islands, so probably in the islands in general, because again it's very tourist heavy. But again, I'm not making this a vacation recommendation. But overall, I would say the unemployment number is trending down, and I think it's sub 8%. Again, the numbers are right there. I could tell you from a macro perspective, if you think about unemployment, how you should think about it like this. The number is really a good number you should be comfortable with. I think unemployment, and again, this is my opinion, is 4%. 4%. 4% is normal. I think that's a normal. And normal, for those of you who want to get into sociology class with me, norm is normative behavior, normal over time. Doesn't mean right, wrong. It just means normal. So I think 4% is a nice normal number. Let's say, if you had to put a word to it, good number, that means things are okay. Anything under 4% is great. When you're 6-7%, I hate to use the word acceptable, but the sky's not falling. I'll put it that way. So 4 is a good number to kind of base your unemployment numbers off of, how you feel about it. And again, as I've always said, that unemployment number is never going to be solid. It's kind of like the poll numbers now, because people who fall off the radar and you don't know whether they're being fully reported or not. Some people are still unemployed. They're just not reporting that they're looking for a job. They've fallen off the benefits package. So there's no way to capture that information. So again, I wouldn't get completely concerned about your retirement nest egg based off of last week's retirement number. So if I had to sum up everything, I think you continue on. I think you should have a good Christmas. I think you should look forward to planning for the holidays. I don't think you need to keep from giving little Jimmy or little Jenny what they want for Christmas. Go ahead and buy them a Christmas present. Go ahead and try and enjoy the holiday a little bit. Take an emotional breather, because it was a very rough year. And guess what? Next year might be just as volatile. So my final thought to leave you with is always remember, aside from it being December 7th, by the way, which is, for those history buffs, the attack on Pearl Harbor. And to try and put that in relative terms, if you remember where you were in 9/11 and how discerning, awful, or surreal, whatever description you want to call it, how that felt, picture that same thing back in 1941. So again, I think it's just as important day to remember as any day, and I ask that you keep those people who served and died for this country in your minds. They're long gone. The World War II veterans is who I'm talking about. There's a few left out there, but again, a very important day for them. So other than that final note, the final note, as I'll say in terms of your investment portfolio, is that it's what I deal with is your long-term serious money. Typically, for most people, that means your retirement nest egg, or what you're going to live off of in retirement. For that type of investment, you want a well-diversified portfolio, meaning all sectors need to be represented in your portfolio, or as many as you possibly can, because some are going to be up and some are going to be down. As you can see in this report, for instance, the energy sector is going up one week and down the next. It's hard to time that. You can't time that. For your short-term game stuff, if you got Vegas money and you want to try and time the market because you know something specific that's happening in one industry versus another, by all means. But I always ask you, what's it worth to you risk-wise? What if it doesn't work out the way you think it will? Are you okay walking away from all that money? If the answer is no, then don't do it. Another question I ask people when they're looking at, they'll come to me with a particular stock or investment idea and want to know what I think about it. It depends, but more than not, I'll turn it back on them. I'm like, what do you think about it? Meaning, if it's down, and that's usually when someone comes to me like, hey, this is down, should I sell it? Well, it depends on how it works with your overall portfolio, but if you're just talking in a singularity, I would say, well, would you buy it again? Would you buy it today, rather? And if that answer is no, you wouldn't buy it, you wouldn't put more money into it, then why keep money in it now? You probably need to go ahead and divest that and get something else. So that's one easy test I have for people is when they come to me, should I sell something that's down? First, I tell them, how does it fit in your overall portfolio? Because there's always going to be something down to balance out what's up. That's just the way a diversified portfolio works. But if it continues to be down, if it continues to be a sore point for you, ask yourself, would I buy this right now today? Would I put another $1,000, $10,000 in this? And if that answer is no, and you listen to your gut, if that answer is no, then it's probably time to sell. So I hope this helped. I know I went on. Please take a look at the email. Do me another favor. Please subscribe to this channel so you'll get the updates without me having to email them to you. And also hit me in the comment section. Hit the like if you don't mind. Please, please, please do me a favor and forward it to your network and help get the word out of about my business and what I'm trying to do and help people. And if there's anything I can do in return, I'll happily do so. Till next time.